Stephen Mayne, is it a kind of a double dip? I've seen some commentary where people are saying it's a double dip. They're going cap in hand to shareholders, really often to refinance debt that's getting very difficult.
Look, I think that anyone who's looked at what happened to Oz Minerals, which is a perfectly solvent company that has been forced into a fire sale of the majority of its assets to the Chinese government because these boneheaded bankers wouldn't refinance them, have been absolutely shocked. I mean, Oz Minerals will emerge from this forced bank fire sale with a $1 billion copper gold mine called Prominent Hill and $600 million of cash. In other words, they were perfectly solvent and fine, and they were threatened with liquidation because they had all these, foreign-owned government bailed out banks trying to pull out, and so people are just panicking that the Oz Minerals situation will happen to them. So the market's up 20% since the lows of March 9. You raise money, and the biggest thing that Australia has in its favour at the moment is $200 billion of cash sitting in superannuation funds, which many other countries don't have, and thankfully companies are able to raise equity to pay down debts, particularly to retreating foreign banks, and I don't blame companies for being very conservative. When you hear the stories going around about the way the banks are treating them, Centro's $200 million in penalty fees to their banks, then you don't want to get into a breach of covenant situation because from there you just get smashed by the banks.
All right, so you're saying, you're agreeing with Rudy, I guess, that it is a race, but you're saying, it's a good thing?
Look, I think that our balance sheets are overgeared, and it is a good thing that Westfield has raised $6 billion and Wesfarmers has raised about $6 or $7 billion as well. There are many other companies that need to raise money, the likes of BlueScope, all the property trusts that Tony mentioned before. I mean, I'm an investor in 650 companies, and I am getting deluged at the moment with capital raisings and share purchase plans like never before.
I don't even know how you read all the paperwork, Stephen.
Well, you don't. You just the capital raisings come in, you apply for as many shares as you can get, you sell them on the first day, and you can make a bit of money that way. But it's an incredible rush to do basically what is a massive debt for equity swap, which is going on to sort of de-lever all these balance sheets. And I think it's a sensible thing. The market's picked up 20%, and I think all companies, if they've got gearing which is too high, should be doing precisely this. And the likes of BlueScope and the Asianos of the world shouldn't wait any longer. They just should get on with it and raise equity if they can.